So the Dow at new all-time record highs, soon to be followed by the S&P and the Nasdaq. Just as I called it, I was saying buy when everybody was selling because of fears of the election. Completely unfounded, completely irrational. I don't want to go through all that again, but I saw an interesting headline when I was just kind of, looking through the internet. Headline is they said just when the market started to make sense, now it doesn't make sense anymore. The meaning there was like whoever wrote this article was kind of saying, well, the market was going down, and that made sense because, it looked like Trump might get elected, and then he got elected. So it was going down, and that made sense. And now it doesn't make sense because it's going up. This just shows you the utter confusion of people out there. They really, really do not understand what is going on, which for you means there is enormous, extraordinary opportunity right now. The people who thought that the market should go down, number one, just based on a very general idea about the elections and uncertainty, that is ridiculous and that is ludicrous. I mean, uncertainty is always out there. We like uncertainty. Certainty is what should make you nervous, particularly if certainty is such that we are certain that we are going to have, some draconian fiscal austerity, okay? Or we are certain that we will run out of the resources and productive capacity to ensure sufficient quantities of the things we need to live, like food and water and shelter and clothing and energy. Okay, that kind of certainty is devastating and you would sell. But uncertainty is always a factor. So, and I see that thrown around all the time. The so-called very smart people. Oh, the market doesn't like uncertainty. That is a non-analysis. Okay, so the people who were selling because we're going to have an election and we don't know who's going to be elected and we don't like the candidates. That's bogus. That's ridiculous. But a lot of people threw their money away based on that view. And now you see the markets going up, and they're all now scratching their heads because they were short or they got out of the market. They raised cash, and now they're like, what's going on? They don't understand it. Now to them, they don't understand it. First of all, that whole election fear is behind us. Second of all, as I've been saying all along, Trump was never a bad prospect for the economy and the market. And slowly but surely, people are going to start to realize that. When a guy comes along and says he wants to spend $1 trillion rebuilding the infrastructure of the country, I mean, how could you look at that or take that in any way as other than being positive? All right? But the point I'm making is we have gone through most of this year. It's November 10th. Most of this year has been shrouded in intense pessimism and bearish sentiment. Okay, starting right off from the beginning of the year with oil prices falling, and then you had Fed rate hike fears, which have been pervasive all year, every single meeting. Oh, they're going to hike rates. Are they going to hike rates? You had the Brexit thing, okay? Then you had the lead up to the election. And then you had Trump being elected. So this whole thing has been mired in a tremendous, people, those of you who have the MMT Trader subscription, you know that every week I put in the AAII sentiment survey. And that thing for the entire year, bullish sentiment has been like 35% below its historical average. Neutral sentiment has been like 35% above its historical average. Bearish sentiment has been above its historical average. So this has been an ongoing feature, this deeply, deeply embedded pessimism and negative sentiment. That all is going to get reversed. There's going to come a time, I don't know when, but there'll be a time we'll be talking about how week after week bullish sentiment is 35% above its long-term average. Okay, we're nowhere near that point yet. And don't forget, the Fed still has to start hiking rates. You're going to get some reflex selling off of that, but those are going to be great, great buying opportunities. And you notice you see the industrials rallying. You see industrial metals rallying. This is all the beginning of an inflationary cycle. Gold's going down, you might say. Yeah, well, the dollar is strong for now, and I expect that's going to reverse. And gold will participate. I still think stocks will outperform gold, but gold will definitely participate. And notice the really big call I made from the beginning of the year, the rate rise, the rise in interest rates. And again, that had nothing to do with some false and foolish notion that, rates were artificially low. It had to do with the fact that I was correctly reading the economy and knew that at some point the Fed was going to start hiking rates, and that's what causes rates to go down. I am short the 10-year Treasury, from 4 big points above. By the way, talking about big points, my short euro pound position, remember that? I have not taken a loss on any single position. That position, which got really stretched on the flash crash, that is now 50 pips away from breaking even. And that was like 600 pips away. It's 50 pips. I'm not only just going to break even on that trade, I'm going to end up with a massive profit on that trade. So it's all good, everybody. Everything is following my script exactly to a T, as I said. MMT, baby. Proper mental game. Oh, by the way, I had a subscriber call me up today. He said, Mike, I've been following you. I get the subscription. I have not taken any losses at all during the entire time that I've been on this subscription. I've made a ton of money. Thank you very much. And there you have it. It's not just me. All right? All right, folks. See you later. Bye-bye.